Welcome to Inside the Cohort, a podcast specifically dedicated to the stories of the executive MBA program at Columbia Business School, class of 2027. I'm your host, Mitchell Black, and today is episode 2. I know we're already rocking and rolling, but I want to take a moment and explain why this podcast was created in the first place. And what would happen is I would have conversations with all these wonderful people in our cohort, and they would have great stories. I would go talk to somebody else and say, "Hey, did you hear about so and so? They have a similar deal as you." And more often than not, they would say, "No, I haven't had a chance to connect with them yet." And in my head, I'm thinking, well, you should. Like, you should definitely link up. But it's impossible for every single person to sit down with every single classmate to hear all of their wonderful stories. There's just not enough hours in the day. So, what I wanted to do was make a podcast where all of our fellow classmates can share their wonderful stories. And what I typically find with really successful people is that the first thing you want to know about them is who are you and what do you do? And that's what we're going to go over, and that's what we're going to talk about. So today I have a very special guest. Andrew Senfield is here. He's an all-out rock star with a great backstory, and I can't wait to share it with you. So welcome, Andrew.
Thank you, Mitchell. Great to be with you.
Yeah, I'm excited. We've got to connect a little bit. I think you may have been one of the first two, three people I talked to before class started.
Yeah, we connected before the program with both with similar time that we've spent together, or not together, but in Atlanta.
Yeah, that was kind of funny when I dialed your phone number, having an Atlanta area code, but you're not originally from there. Where are you from?
Not originally from Atlanta, so I grew up in Western New York State, very small, rural, blue collar town. Um, Father was in the timber business, mother was a teacher. Sports were very common in our family. So we did a lot of activities. I kind of progressed with ski racing, and so most of my days were spent, Tuesday through Sunday were spent up at the mountain, at least when there was snow on the ground. Mondays were the day off, and then, as you might imagine, school was a priority in my family.
Okay, two things to unpack there. The first one is I know what a teacher is, but when you say lumber industry, or I believe that's what you said, not lumber, what is that?
Yeah, so timber business.
Timber.
My father started a business. He was essentially cutting firewood and selling it, and then essentially started a business where he would purchase land, he would log the timber, and then he would improve the land and sell that as an asset. And so he grew that over time, and something today that's very similar to what you would call sustainable forestry. There wasn't a name for that at the time, but essentially improving the land and trying to source an appropriate amount of timber.
Wait, is he still doing that?
He's not. He's not. He's since retired, and now he plays a lot of golf, and spends a lot of time with the grandchildren.
That's awesome. Good for him. My first job was cutting firewood, and but that doesn't sound prestigious. So maybe I just say I was in the timber business. I literally
I
had one of those mechanical, axe things that comes down and splits the firewood. It was terrible.
I remember those. He did it a little differently. He used to leave for work in the morning with a couple of steel 64 chainsaws, and if you've ever carried those, they're incredibly heavy, and swinging one around all day can be it's a tough job.
That's wild. So, but you said you did competitive skiing, and it sounds like at a high level.
Yeah, so ski racing was a big sport for me. I did it growing up. There's essentially school ski racing teams, and then there's what you call junior Olympic ski racing teams. Think of it akin to um, your kind of baseball programs that you see in Atlanta, your club teams. And then those typically progress in something like a US ski team or collegiate type of uh, competition. And so I did that all through middle school, high school, and then stopped doing that after my senior year. And on to college, I decided that I'd hang up the skis and just do it for fun. But yeah, I was incredibly competitive. Traveled all over the country racing, and really enjoyed it. It was a wonderful experience for me.
So when you say that, is it downhill skiing?
Yeah, downhill skiing. So think slalom, giant slalom, super giant slalom. If you see it in the Olympics, they're essentially going around the poles
Mhm.
in the the real tight suits.
Did you have one of those helmets like in Dumb and Dumber?
Not quite like that, but I did have a helmet. I had
That's
stickers all over it at one point.
that's super cool. So you elected not to do it in college. Did you do any sports in college?
I did. So I went with my second sport in college, which was boxing. Decided to do that. I was at a point where I was a little bit burned out on ski racing. And if I wanted to take it really seriously, I probably needed uh, one more year of training and practice before I could get to where I needed to be. And I just wasn't willing to do that. So went with boxing, and then did a lot of other things in my undergraduate. I was very involved in school and leadership programs and the business school, things
Do you have a boxing record?
like that. Yeah, I suppose. I mean, it's interesting the way Nevada structures it. But yeah, you have a record. I had some exhibition fights and then some traditional fights, but it isn't like a pro type of boxing format, right? You're not getting 30, 40, 50, 60 type of fights. So it's also safer in terms of you see it with the headgear, your shorter time frames. You do a maximum of 3 rounds, and then Nevada had at the time one of the top teams in the country. So it was a lot of fun. You also, I tell people it's a lot like college football in the South. It's very popular in Nevada, so you get to do a lot of community events. You're engaged with school. The fans are unbelievable. It was a great experience.
Did you ever knock anybody out? No? Okay. Well, that's I didn't know that. This is the first time I feel like I'm hearing about boxing. That's very interesting.
Tends to people love to talk about it, so I
Yeah, it's a
tend
good
to be
party
more
trick.
casual when I bring it up.
But you went to school in Nevada?
Went to school in Nevada, and part of that was because of boxing, and then academics. I had a part academic scholarship and studied finance and economics. Um, at that point, I knew I wanted to go into something capital markets related. When I was 15, I talked my parents into getting me a Wall Street Journal subscription. And at the time, you could get the actual paper delivered to you.
Mm.
And I would go through those every day and then kind of using what I didn't know at the time would be a Graham Dodd investment type of model or research. Gave them all the money that I had saved up at the time and said, I want you to purchase this stock for me. Um, 8 months later, I was up almost 100% return on it. And I thought, this is the awesomest thing in the world, right? Because at that point, I had worked, call it 15 years, which I thought was a lot at the time, relatively insignificant. But yeah, so I was hooked after that. I was really interested in financing capital markets.
And so it's up, nearly 100%. Did you take it and run, or did you reinvest it, or hopefully you didn't lose it?
I did. I sold it, took the money, and then probably did what any kid would do at that time, went out and had some fun or put it into my car or something like that. And then I didn't revisit deploying capital until I was in college again.
Okay, so how long was that time frame? You put it in at 15. When did you get it out?
8 months.
Oh, yeah, sorry, 8 months. Yeah. So, man, that's That's really solid. Do you remember what the stock was?
I do. It's MGM Grand. And I actually, years later, I bought a share of the stock and I had them send me the actual stock certificate and I have it framed in my house.
That's really neat. And that clearly must have hooked you because I was going back through your LinkedIn. I was like, doing some other stuff, trying to, get a little bit of backstory on you. But you've, at least from the outside looking in, it seems like a linear straight shot. I mean, you've been Goldman Sachs, Merrill Lynch, just all in this finance space. I could be wrong, but have you just been relentlessly dedicated to this space, or did you change within the space?
Yeah, and I'll correct you. I wasn't at Goldman, but I was at firms Morgan Stanley, Merrill Lynch, and Merrill Lynch was owned by Bank of America at the time, Neuberger Berman. But yeah, I've always had a passion for that space. And coming out of college, I wanted to go into investment banking or institutional trading. I was fortunate to get a role in Atlanta as an equity and derivatives analyst. And I mostly focused in options. So came out, got right on the path, pretty technical. I was promoted into trading, and at the time, what we were doing was we started out doing risk arbitrage. So essentially, a company would merge, we would short one, and we would go long the other. And that just means we're selling the stock. Going short means you sell the stock and then you buy it back when it goes down. And if you go long, it means you purchase the stock and then you buy it back or you sell it when it goes up for a profit, hopefully.
Okay. So I like that example. And I know we're all in business school, but there's a whole bunch of different businesses. And not everybody might be super familiar with what you explain. Can you give a high level of the areas that you just touched on what you might do in that business?
Yeah. So what I did in that business is I would essentially run statistical models based on historic price information within US stock markets at the time. And we would find different inefficiencies. So some people would akin that to quantitative trading today. And so we would go through and build out and fine tune these different models that we had. It was really interesting. I got to look at a lot of data. I got to find nuances in the data. We would back test certain strategies. And then you got to figure out kind of what worked and what didn't work. So it gave me great exposure to many different factor-based strategies within the market.
Do you feel like it made you stronger with understanding business in general? I mean, it sounds like you're industry agnostic.
To some degree, it was a little bit more focused in capital markets than it was deep value investing. So a little bit more on probabilities, statistics, data analytics. But there was certainly an element of that. Sure.
How long are you hanging on to certain things? You mentioned that it's not value investing. So do you have a shorter time frame that you're working with?
Well, in this particular role, many of the traders, and I later got promoted into one of those roles, were taking shorter type of positions. So you'd have some intraday, you might have some that would last a week or 2 weeks, maybe even a month, but you're rarely holding something 6 months to a year in that type of role.
Okay. So what are you doing now?
So now what I'm doing is, and I'll just give you a little bit of a runway up to where I am now. So over the years, I worked in equity and options, had a stint in asset and mortgage-backed securities and fixed income with a large investment manager. I was at Merrill Lynch, built a financial advisory practice, and then ran what's called a buy right strategy. And we can get into that if you want details.
Yeah, please.
And then was recruited over to Morgan Stanley. While I was at Morgan Stanley, partnered with a team and we built out two things. We grew the financial advisory practice, which I loved. I loved working with individual clients. But then we also built out an investment management strategy similar to the buy right, which is we're we were writing or selling options on concentrated stock. So we were essentially taking low cost basis or zero cost basis stock, meaning it was worth zero or a couple pennies because individuals or families have held it through multiple generations. And they were essentially living off of that income. So they were living off the income from a dividend. And we were able to take that and essentially double their income with stock options.
Hmm.
So it was really interesting. We marketed that through the firm. We worked with other financial advisors and their clients all over the US. It was a really exciting opportunity. I was a portfolio manager on that strategy.
I mean, doubling is obviously fantastic, but is that standard or are you in the top 1% for doing that?
I don't know that there's a ranking system for it, but I think too, if you have, say, like Coca-Cola, that has for example, purposes, a 2% dividend, and you write option contracts and you create an additional 2% on that, that is not unreasonable.
Okay.
It's a lot of work and it's difficult, but it's not unreasonable.
Okay. And then can you go back and elaborate on what you touched on before? The
Sure.
other
And,
the
and
other job you were explaining?
at Merrill,
Yeah.
yeah, so at Merrill, built a financial advisory practice, and then was managing money in a buy right strategy, which is very similar to the other one. That one, essentially, you would buy stock and then you would also sell options on that. But the stock would turn over a little bit more than someone that essentially wanted to hold it forever through multiple generations. So instead of the client choosing what stocks they wanted to purchase, I was choosing those within the portfolio.
Got it. So you're dealing a lot client facing with like very ultra high net worth individuals.
Just, yeah, to some degree, in that role, it was probably 30% analytics, 40% at some times, and then, 60 or 70% client facing,
Got it. So
which
where
I
are you at?
loved. I really enjoyed working with clients. And most of my career, I've gone back towards the analytics and the portfolio management, and then pivoted more towards the client facing, raising capital, advising, helping advisors and clients reach their financial goals. So I'm trying to find a spot where I can merge those two skills.
What you brought that up a couple times with engaging with clients. What's your favorite part about doing that?
I mean, I love the human interaction. So this will resonate with you in our leadership course with Professor Ingram. My top two strengths were essentially self-discipline, self-regulation was number one, and then two was teamwork and collaboration. Right. So how do you take that analytics component, that portfolio management component, and then merge it with, building relationships, teamwork, helping people realize their goals, helping them be successful, that kind of camaraderie and collaboration.
How much time, like in a year, how much time in hours do you spend with these clients?
Oh gosh, that'd be tough to quantify. Um, that would be really tough to quantify. I mean, you could kind of take your work day and back into it at 60, 70%,
Oh,
in
wow.
that particular role. Yeah.
Okay. I didn't know it was that much. So where are you at now and what are you doing now?
Yeah. So now I'm in the process of building out a strategy that I've worked on a little over 2 decades. I've managed it in my personal account and I've fine-tuned it over the years. What I'm trying to do now is either I'm going to build that track record and roll it up to a hedge fund or launch my own fund.
Okay.
So I'm trying to find that fit between the analytical portfolio management and then that kind of human interaction. I love the analytics, but being kind of isolated all day isn't a great fit for me.
Is there any way that we can unpack that a little bit in the sense of just how it works. And I'll just use myself as an example. What you do is something that I have never understood. I just can't get my brain to grasp it. I've tried for a really long time, and it's just hard. And maybe other people feel that way, but let's use me as an example. I have no idea what that means. So can you break that down?
Yeah, let me break it down in a couple of components as best I can, and it can be complex, but I'm gonna try to simplify everything here. So what I look for is asymmetrical risk. All that means is I want to risk $1 to make five, and I want to find as many opportunities like that as I can. Now, statistically, I know that if I'm highly selective, I'm going to be right 50 to 60% of the time if I'm highly selective. So if I risk $1 to make five, and I can do that 50% of the time, you're going to have a positive expectancy. You're going to have a strong positive outcome. Now, on a bad year, I know that can come down to 25 or 30% of your winning investments. So even then, if you have kind of 5 to 1, right? You risk $1 to make five, and you're only right 25 or 30% of the time, you still have a positive expectancy. So at that point, it becomes about risk management. It becomes about finding opportunities and about risk management. What do those opportunities look like? The portfolio is what's called opportunistic. It's concentrated, meaning we have a smaller number of investments. It has the ability to go long and short, and I use mostly options, sometimes equities, but mostly options. Did I do a good job of explaining that?
Yeah, like now I'm like I get it at a high level, but you also work with or for Neuberger Berman, and you're how does that relationship work? That you're with them, but you're using this strategy. Are you accessing their capital?
I am not. So I've transitioned out of that role to focus on this project.
Okay, so you like get your own clients.
Mhm.
Wonderful. And how does that work? You mentioned rolling it up to a hedge fund. Can you explain what that means?
Sure. So when you're running an investment strategy, you can do a couple of things. You have to decide whether you want to run the strategy as a portfolio manager or you want to run the strategy and the business. So if I were to roll it up to a hedge fund, that would alleviate the business components, meaning they would provide capital from their clients. They would cover things like offices, phone, technology, things like that. If I decide to run it, I would have to build that out. I would have to build out the risk team, the compliance team, the business portion of it, raise capital, all of those different components. Right now, I'm focusing on the portfolio management. I have one client that I'm very happy with, and I'm not taking on additional capital at this point. They have the ability to scale as high as I want to go right now. So I'm focusing on building the track record. And then from there, and as we progress through this program, because as you know, the Columbia Business School EMBA is very demanding, I can decide whether I want to roll that up to a firm or whether I want to launch my own.
Okay, so I'm thinking super simple here. The benefit of or I guess the opportunity to partner with the hedge fund is they're essentially buying or wanting to partner with your strategy, and your strategy is better than somebody else or some other body they could partner with.
Essentially, they would typically have a variety of different strategies and they would manage risk around that. And
Mhm.
if mine fit into that risk budget, if you will, it would be something that could be appealing.
Yeah, that's you and I have had a couple conversations about that, and it's just, I've always been in consumer retail, customer facing, real estate, things like that. I've never been in stocks, bonds, trading. I didn't realize how open or much of an ecosystem it is that you guys can work together like that. I was always thinking, closed system. I'm in this hedge fund with this capital. I mean, it sounds like you guys are having a business within a business.
That's exactly correct. And having known a little bit about your background, I would say it would be very similar to having a large, say, domestic fitness firm where you could own almost like a local franchise. And so
Okay.
they would cover a portion of that, and you would be responsible for certain components of that franchise and running it, but they would essentially handle a lot of the business costs and risks for you. So, yeah, and there's a lot of different avenues you can go within, the hedge fund structure, investment management structure, even wealth management structure.
Wonderful. Well, I feel like I just got stats class 2.0 right here. I mean you seem to be crushing it and you seem to be just on fire. What made you want to get your MBA?
Great question. It's something I've always wanted to do. I had an internship in college with a venture capital company. And my job was basically to follow around the CEO. And I know that sounds glamorous. I'll tell you, my first project was putting together a filing cabinet, which took me about all of 4 hours, ate most of the day. Um, I did get a lot of experience reviewing business plans, and I was in some very high level meetings, which was exciting. But he did his MBA from Harvard, and I remember talking to him at one point and brought it up to him and asked him about it. And he said, if you ever want to do your MBA, you should go to a top program if you want to stay in finance. And so it always stuck in the back of my head. And I just gotten to a point in my career where now was the time to do it. Everything kind of came together, and I'd explored it at earlier points, but it wasn't the right time.
What's a couple things or ideas that you're hoping to extract from the program?
Well, I want to sharpen investment management capabilities. So Columbia was very appealing to me because they have one of the top investment management programs in the world, right? So you can always go a little bit deeper in that exposure. The community, unbelievable, right? The people in our cohort, the people we've met, you feel like you fit in. And then when it comes to professors, alumni, school administration, students, just a high level of intellectual capacity, curiosity, and then really big hearts for most of the folks that we've met. It's been a wonderful experience for me.
I can echo that. I mean, I think we share a lot of that same, those resonating thoughts or feelings, but you don't know. I mean, you don't know it 100% until you're in it. And then you're like, these people actually are fantastic. Did you start just 100% on Columbia or did you, look around somewhere else and land on it? Because you're traveling from Florida, right?
I am. So I commute in every other weekend. Um, yeah, if I'm flying in from Florida.
But did you look anywhere else or was it
I
Manhattan?
did. I looked at one other program, and for me, it was top investment management programs, and then it was time zone.
Hmm.
I didn't want to cross time zones.
I
So,
can, yeah, go ahead.
yeah, so trying to make it as seamless as possible. And then some of the logistical components helped. And then it was all about, where do you fit in? Where do you think you can get the most value? Where can I improve leadership skills? Where can I improve some technical skills if need be? What was going to be the best overall fit? And I landed on Columbia.
That's good. Sounds like a really, thoughtful, pragmatic approach. I'm commuting from Atlanta. I didn't realize how important the non-changing of time zones was going to be until I did it. And I'm thinking, man, this is really great that I'm not. I know a lot of people in our cohort are, and that's, it's a challenge, but I'm just thankful to not.
Yeah, we have some folks that are commuting from all over the world, and God bless them. You have to admire what they're doing to get in there. I feel like I have a long commute by comparison to some, but it's been a great thing for me because I'm locked in for about 2.5 hours on the airplane. So I've been able to focus on some of the studies, and it's been a beneficial use of time.
Have you had any nuggets stick out to you so far? I refer to them as nuggets, but something where you're just like, man, I'm taking that. That's wonderful.
Yeah. Yeah, it happens every weekend. I would tell you the most impactful, and something I had done intuitively for much of my life was our value exercise in leadership class, right? So we now have a laminated version of our values that we can take around with us, but it really helps when you're making difficult decisions to align with your value system. And that's been most impactful for me.
I agree. That was a very neat exercise to go through. Has that been, I mean, you don't got to rank them, but has that been one of your favorite classes so far as leadership?
It has, and surprisingly so, I did not think it was going to be one of my favorite classes. I thought, statistics, accounting, and then, excited for more of the quantitative finance type of courses, but that has been a huge standout for me.
Now, after the, I don't know if you put any thought into this, but after the core classes, when you get to pick the electives, are you gravitating towards any particular electives?
I'm gravitating more towards fundamental investment, quantitative finance. However, I'm open-minded to more of the leadership courses after working with Professor Ingram. Maybe some behavioral finance, I think is very appealing.
Okay. That's interesting. That's good. What have you now the classes are wonderful, but you've also been, especially for a commuter that's not there all the time, I feel like I see you at every event. I feel like you've really dove in, met a lot of great people. How's that experience been with networking with our cohort?
We have an awesome cohort. Um, and that's been really exciting. And I think because I commute in and you know this as well, that you're trying to maximize your time there, right? There's so many people, so many interesting stories, so much to learn that I try to be diligent with my time and doing events and being interactive and asking questions and being curious and getting to know some of our friends and colleagues. I feel like I haven't done as good a job engaging in some of the club events, just given that a lot of them are scheduled during the week. Next semester, I hope to spend a little bit more time up there to even engage more. But yeah, it's I've really enjoyed getting to know our cohort.
Yeah, and what was really interesting is you brought when we had the holiday ball or whatever they called it for IMBAs, you brought your girlfriend who also goes to Columbia.
Yeah, so she's finishing up her master's in wealth management. I think she finishes up in 2 or 3 weeks is the end of her program. Um, and that's been one where I've kind of been in the background because she's learning so much interesting information, but it is a direct focus in what she does. She's in the wealth management business, so it's a perfect fit for her.
And so, what's the difference between wealth management and what you do?
So, wealth management, she works with clients in financial planning to help them realize their financial goals. So, think about working through a process over a lifetime and having someone there to guide you.
Hmm,
When she allocates capital, she could potentially allocate capital to someone like me that's in investment management or runs a specific strategy. So she will allocate clients' capital to different strategies to help them achieve their goals. What I do is I might be one sleeve within that process.
got it.
We don't work together in that capacity, disclaimer for compliance purposes, but that's the difference.
Okay. That's wonderful. I mean, I can just feel it. You seem to love this space so much. Do you have any hobbies or interests outside of it? Do you still ski?
Great question. I do ski. I enjoy playing golf. I read a lot. Little poker here and there, not as much as I used to play. I really enjoy games of probability or, something I can build statistical significance around. I'm trying to think what else. I'm probably one of the few that still has a library card and uses it from time to time. Um,
What do you like to read? I know you and I both connected on Annie Duke's book, Thinking in Bets. That was good.
Yeah, that's on my nightstand. Um, what else do I have on my nightstand? I have Reminiscence of a Stock Operator, which I think it was written in the early 1900s. I think everyone should read that. Finance. I like the kind of spy thriller fiction type of books. I usually burn through those if I'm on vacation. I can You can get through those pretty quickly. Health and wellness. So I do like learning about wellness, longevity, things like that. I think the healthcare space and technology space are coming together in an era that we're living in that's going to be incredibly impactful to society and certainly individuals over the next 5 to 10 years.
I was reading yesterday that the adoption of AI for healthcare, based on people willing to put information into artificial intelligence and trust the information coming out of it to help make a decision and do whatever it says, that adoption rate is 2.2 times higher than any other sector.
Wow.
Yeah.
Wow, that's an interesting statistic. And
And
we're in the early stages of that development.
well, yeah, I think it's mostly attributed to the fact that people don't know anything about health and wellness. Like the average consumer does not know enough to even begin to make a decision. So any information they're given, they will more than likely be like, "Oh yeah, let's just do that." Um,
It is a difficult space to navigate, right? You really have to rely on professionals.
Have you I mean, this isn't exactly what you do, but on the theme of finance and books and stuff, I just got turned on to I'm probably not gonna say his last name right, but Michael Gatto. Have you studied any of his stuff?
Hammond, tell me
He
about him.
does all credit investing and specifically distressed credit investing. And he wrote this really good book called The Credit Investor's Handbook, which I just picked up. And I just listened to some podcasts he was on, but he's a professor at Columbia and he teaches some of the elective courses. And the value investing program just came out with a value investing credit program. And he's a very interesting fellow with a ton of energy, and his concept is really interesting. So I know it's not exactly what you do, but speaking of Columbia, speaking of electives, speaking of investing, uh, we got some good professors.
We have some great professors. We have some great professors. I am not as excited about the credit side as I am the kind of equity and derivative side of the business, but credit has been a booming market, especially private credit over the last 4 or 5 years has become more democratized, and there's a lot of interesting things that are happening in that space. Distressed debt is also a really interesting business. Not dissimilar to the value investing program at Columbia, where you're buying assets at a deeply discounted value.
Yeah. So I mean this isn't going to air till December 9th, but it's the day before Thanksgiving right now. What are you doing for Thanksgiving?
Yeah, I got to tell you, Thanksgiving is one of my favorite holidays. Love to eat a bunch of turkey, watch football, relax, catch up with family. We're actually going to see some family here locally that we'll spend the day with. How about you?
Um we're going to my aunt's tomorrow on Thanksgiving. I've actually been so immersed in school, I don't really know what the plan is for Thanksgiving. But on Friday, we have everybody over, all of our friends and neighbors, and we do a big Friendsgiving, and we do that every year. So I'm really looking forward to that. That's gonna be a lot of fun.
Good for you. Yeah, living in Florida has changed my um, just the development of the seasons. You don't have it as much as you did in Atlanta or in the Northeast. So Thanksgiving and Christmas just sneak up on me every year. It's a couple days before I'm scrambling to get it together.
I bet it's kind of neat going from that, and then you land in New York and you have all these trees changing colors, and you get the full seasonal effect.
I do miss the change in seasons. It's nice being up in New York in the fall and into the holiday season as well. But yeah, then I come back here and it's mid 80s and your shorts and a polo or a t-shirt and then back to three, four, five layers of clothing.
Yeah, well, there's a running joke down south. I'm sure you've heard it. Everybody says nobody retires and moves up north.
It's interesting, and I had thought about that when I was making the transition down here. I thought, wow, this is great. I get to live in a place where people go to retire, and there was some appeal to that.
Now, on golf, how often do you play golf?
So I have played once this week, and that was since our program started. So between working and homework and staying on top of everything, it's prior to that, a couple days, a couple times a week, at least once a week.
Oh, okay, that seems like a lot. So I don't I've tried to get into golf. I don't know anything about golf. I was gonna try to sound cool and say what's your handicap, but I don't even know what that means. So first off, what's your handicap? Second question, can you explain what that means?
So my handicap or index is a 6.4. And all of that means there's a complex algorithm around trying to equalize golfers essentially for their skill set, right? So you could go out having never played before. You play, I think you need maybe 10 or 20 rounds to develop your index, and then they would give you a number.
Hmm.
And then you and I could go out and play competitively if we wanted to, and we would use your number and my number in a comparative type basis, right? So it wouldn't be you and I playing each other straight up. You would have, or I would have some sort of penalty, or you would have some sort of benefit. So it's a great way to kind of equalize the golf community, and everyone can have fun.
Okay. That makes a lot of sense because I mean, it's hard for me to get into golf. I just need to get over this, but it's been hard for me to get into golf because it takes so much time. I need to get over that. But the second part is it's hard when you're not any good. I mean, it's like I hit it once and it's great. And then the next time I hit it, it's not good at all. So my buddy, is making it on par, and then I'm pulling weeds over here to get my ball. It can make it really unfun if you didn't have something like that.
It's a struggle, and even if you play a lot, you can have some bad days, and but the good shots keep you coming back, and it's something. I feel like golf is a lot like investing in a lot of ways. You want to build that consistency, you want to build that muscle memory, and you really just want to avoid the bad holes.
All right. I'm gonna go play golf.
Get a lesson, put some time into it. It's great for business. You can spend, 4 or 5 hours with somebody. It's great to build relationships. And for you being a competitive guy, it's going to be a little tough in the beginning, but I'm confident you'll pick it up very quickly.
Thanks, I appreciate it. Hey, well, thanks for coming on. That was an awesome conversation, and I feel like I knew you before, but now I really know you. And I hope everybody listening just got to peel the onion and just understand all the great things about you.
Thanks, Mitchell. It was great being here with you, and thanks for having me on.
Thank you so much.